Hello everyone. In this video, I wanted to define leverage. What is leverage? Technically, leverage is defined as the ratio of a company's loan capital to the value of the company's shares. That's mean the comparison between the debt and the equity, and it is referred to as gearing as well. What is the importance of leverage in business? Speaking about real estates, leverage is very important because it determines your success in your investment. You are an investor, so keeping your money in the bank doesn't have any leverage. Saved money has no leverage. It's one-to-one leverage. So to have leverage, you gotta invest, and you gotta add value to your investment. How to do this? It's by doing more with less. This is the rule of leverage. To be successful in leverage is to learn how to do more with less. And you can do this with assets that you have control on, that you can control. That's why I prefer to speak about leverage in real estates, in real estate investments. Why? Because stocks and bonds and mutual funds generally you don't have control on, or it's difficult to have control on because it's related to the market. Whereas real estates, the value of your investment can be higher and can be controlled by you, by the investor. How? Let's suppose that you have a debt to invest in a house or in an apartment. So your leverage would be, for example, 1 to 4. Your debt and the value of your apartment. So the more you add value to your apartment, the more your leverage is successful, the more leverage you have. How to add value to an investment like real estate? Generally, people think that leverage is in real estates is related to the market of real estates, the market value of the building. I mean, but it's not always the case. Why? Because the market you can't control. The up and downs of the market you can't control. Many people invest in real estates that have had like inflation in their value, and they lost their money. So it's not up to the market. You can control the value of your investment in real estates. How? It's by not relying on the market value of your building or your apartment or house that you purchased with the debt from the bank, but rather relying on its rental value. If you can increase the perceived value of your rental house, you rent it and you increase its rental value. How? It's by managing it. When you manage it, you can have increased rent for it. And the more the rent is increased for your apartment or your house, the more leverage you have. The more your leverage will be successful. Why? Because you'll add value to your investment. And this is not dependent on the market value of your investment, of the real estate you have, but it's dependent on your ability to manage your real estate, your apartment, for example. Its location, for example. The jobs, the salaries, people that will rent it, your ability to manage it, to improve it. For example, you can have modifications on the building, painting it, good furniture, good. For example, a lot of accessories that you can do so that the perceived value of your rental house or apartment will increase. And the more value you add to your investment in real estate, the more leverage you'll have. And this is so good because real estates enables you to have control of on your investment. People say generally I hear people say leverage is risky. It's not risky. It's risky when you don't have control on your investment. But once you have control on your asset, you can increase your leverage. And leverage is very good. This is capital to know so that you improve your financial education in matter of investment, especially what concerns real estates. Thank you et à la prochaine.